Financials are on the edge, with a neutral trend, and this week's modest gain of 0.39%, a significant catalyst is emerging, posing major risk. This is what every serious investor needs to know about financials right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, the overall market context is one of elevated uncertainty, with the VIX closing at 26.8, indicating a higher level of volatility and risk aversion among investors. Within this context, the financial sector is holding its ground, relatively speaking, with the sector ETF, XLF, posting a gain of 0.39%, which is notable given the broader market conditions. This resilience is a key reason why financials deserves our attention right now, as investors seek to navigate the complexities of the current market regime. Please keep in mind that this is educational content and not financial advice. As we delve into the financial sector, it is essential to consider the broader themes and trends at play, and how they may impact the sector's performance. The sector's performance relative to the S&P 500 this week is also worth noting, as it provides insight into the sector's strength. Let us start with the technical picture and what the charts are telling us. The financial sector, as represented by the XLF ETF, has shown a modest gain of 0.39% over the past week, though it is still down 3.25% on a monthly basis. The Relative Strength Index, or RSI, is currently reading at 39, which indicates a neutral signal, suggesting that the sector is not overbought or oversold at this point. This RSI reading of 39 implies that the sector has some momentum to the upside, but it is not strong enough to indicate a significant breakout. The trend direction is still somewhat uncertain, lacking strong conviction in either direction. Key support and resistance levels are likely to be tested in the coming days, as the sector consolidates and tries to establish a clearer direction. The current move does not appear to be a sustainable breakout, but rather an attempt to break out of the recent consolidation phase. This week, we will be watching for a specific technical setup, where the sector will try to regain its momentum and push through resistance levels, potentially leading to a sustained move higher. Now let us look at the fundamental catalysts driving this sector. The financial sector is poised to be heavily influenced by macroeconomic factors this week, with key events such as the PCE inflation data and non-farm payrolls having the potential to significantly impact sector performance. The current market regime of elevated uncertainty, reflected in a VIX of 26.8, suggests that investors are bracing for potential volatility, and the financial sector is no exception. The key stocks in this space, including JPM, BASF, WFC, and Berkshire Hathaway New, are signaling a mixed bag in terms of sector health, with some banks showing resilience in the face of economic headwinds, while others are facing challenges. This week, we will be closely watching any earnings reports, regulatory news, or macro data that could move this sector, as these developments have the potential to either bolster or undermine the fundamental thesis for being positioned in financials. The longer-term fundamental thesis for this sector is centered around the potential for financial institutions to benefit from a rising interest rate environment, which could lead to expanded net interest margins and improved profitability. However, this thesis is not without its challenges, and investors must carefully consider the potential risks and rewards. Please remember, this is educational content and not financial advice. Next, let us talk about the specific risks you need to manage this week. The financial sector is facing significant risks this week, primarily driven by regulatory uncertainty, geopolitical tensions, and a potential economic slowdown, which could lead to reduced consumer spending and borrowing, ultimately impacting bank profitability. Given the current volatility environment, with the VIX at 26.8, investors should be cautious with position sizing, balancing risk and potential returns. Unexpected headwinds, such as a surprise interest rate hike or unforeseen global events, could further exacerbate market instability. To manage downside exposure, a disciplined framework is essential, including stop-loss orders, diversification, and regular portfolio rebalancing. By adopting a proactive approach to risk management, investors can better navigate the challenges facing the financial sector. This is educational content, not financial advice, and investors should consult their own advisors before making decisions. And now for the strategic outlook, where does financials stand heading into next week? This week, we maintain a cautious stance on financials due to rising interest rates, and investors should track the theme of banking sector consolidation. Our strategic positioning is informed by market dynamics, and probabilities suggest a neutral to slightly bearish outlook.
Please remember, this is educational content and not financial advice.
If you found this video insightful, like, subscribe to Financial Market Oracle, and comment your financials watch list below.
Until next week, stay informed, stay disciplined, and stay profitable.
Cheers!
This video is for educational and entertainment purposes only and does not constitute financial advice.
Always do your own research before making any investment decisions.
Past performance is not indicative of future results.